turned out to be quite a difficult day for the markets. Let's get you who are the voices which will be joining us on the show today. Nitin Raheja of AFQ Advisors, Neeraj Diwan, Director at Quantum Securities, along with Sandeep Wagle as well on the charts. Neeraj, how did you look at the market today after almost 4 days of gains? The pullback did not really last beyond 100 points. Do you think it's some part of profit booking and the pullback may resume, or we are actually technically very weak and may not find support this time round around the 200-day moving average?
Yeah, good evening. I think the kind of fall we saw during the day, it more or less looked like a panic kind of selling. I think political uncertainty is one thing which everyone gets spooked of, and everyone on the street understands that political uncertainty can be bad for the short term for any country. I think that is one thing which spooked the market today. And globally, things are decently placed. We didn't see any bad news coming anywhere as far as the global front is concerned. So I think just a one-off statement by one of the political leaders is which caused this market to fall like this. But I think that market, the kind of fall we've seen in the mid-cap stock, we did see some building which has started happening. People are smart money is coming in buying stocks with decent mid-cap stocks also. So this kind of a broader participation in the market, the last 2-3 days were pretty encouraging. And today also when the market fell, the broader market didn't fall that much, which the way some of the large cap stocks did fall. So one thing would be interesting to see that how the FIs behave today, because liquidity is one which has really given a good support to the market in the last 2, 3, 4 months. So if liquidity is still strong, that figure would be really interesting to watch today. And otherwise, I think that market can take a support even after today's fall, because I don't see there's too much of a worry immediate, and today's reaction was more or less like a panic reaction.
Panic reaction it was, and Sandeep, on account of that we did reach some very psychological levels on the downside too for the Nifty. Given that the fundamentals don't really seem to be supporting, the technicals also seem to be very weak for the markets right now.
Well, Aman, yes, I think we have been maintaining that this pullback rally it does not show that kind of strength, and there is a little upside than more of a downside, and that is what we've been proved today. So I would still say that I don't see the Nifty breaking down 5600 and going past that and going to 54, 5450. I don't see that. I would still want some more evidence. I think 5620, 5630, you have been talking of the 200-day moving average. That may still act as a support. But on the upside, very clearly 5740, 5750, that level is going to act as a very strong resistance. And we are in a band, a consolidative band of 5620 and 5740, 50 over the next few trading sessions. I mean, from today's action, that is what I have concluded.
Right. Nitin, what's your prognosis for the month of April? What could be the best case scenario, and do you think that the worst case scenario in the Nifty?
Honestly, as I mentioned even earlier, our belief is that it will continue to trade in a very, very flattish range as such. I think the initial results, as has normally been the case when they come in, will probably are going to be the good set of numbers that normally come in and keep the market more on the higher side of the range rather than the lower side.
What's your view then, Neeraj, when it comes to the entire real estate basket? Because there is no denying that fundamentals for some of these companies seem to be quite weak.
I think real estate pack needs to be divided in good balance sheets and bad balance sheets. Now there are companies which have very decent balance sheets, and now with the we've seen even in the north where we stay in Delhi also, real estate prices have started correcting or at least stagnating. So I think more and more sales should start happening now, because the inventory which they've been holding on to, they'll come and sell those inventories. So that can really add into the revenues for these companies. So I think you need to segregate companies which have a decent balance sheet, and if sales will pick up going ahead, I think these are the companies which can benefit. And according to our view, interest rates are going to come down the next couple of quarters, so that will definitely benefit directly the real estate companies. So keeping all that in mind, I think real estate is one sector where you will make money in the next 6 to 9 months.
Right. Nitin, during the last quarter earnings, we saw two really big surprises from the index stocks. So one is Infosys and the other was Reliance Industries. And Infosys is actually standing out. Do you think this time round it could be unlikely that a big surprise could be there in terms of Infosys numbers?
IT environment, it's much better, but it's not really setting the house on fire. So I think people will be looking for Infosys very eagerly, but I believe it's going to be an event which will do great for the media TRPs rather than for the stock.
Sandeep, let's talk about some of the big laggards in today's session. You had Bank of Baroda, Tata Motors, Bharti Airtel, all of them coming under a severe bit of selling pressure. How would you look at the charts of some of these counters in NMDC, top loser on the Nifty, as well as DLF and Bharti?
Well, all of them are weak stocks, with the exception of Bank of Baroda, which displayed sudden weakness. I think Bank of Baroda was easily the most weak, can be termed as the most or the weakest stock in the banking space. But talk of a Bharti, talk of a NMDC, both of these stocks, even a Tata Motors, have not been showing strength over the last 2 days in this bounce back rally, and they have been showing weakness. So obviously I am not surprised with that. In fact, we have been having a sell in Bharti over the last 2 days, and today the fall did come. Bank of Baroda was a surprise, the way it cracked from 700 plus levels to 670 levels, a 3% correction, and I see a little more downside in Bank of Baroda. And I think the Bank Nifty also gave way in the last 1 hour, so I think some more downside. And all of these stocks, I think they are weak in the weekly charts also. Position wise also they are weak over the little next few weeks or so. So they are good sell on every bit of an up move that comes in.
Neeraj, now to bring it to you, the kind of weakness that we saw in the equity markets today was also a reminder of the fact that we've been underperforming the global markets, and we don't really need the global cues to be weak in order for our markets to take a big tumble. How important do you believe the liquidity flows will be as a driver for growth?
I think liquidity flows will be very important because we definitely have been underperforming, like you said, for this year till date. And our political uncertainty and the kind of economic data that we have is not very encouraging. You get these statements today, tomorrow from any political leader which can spook the market like it spoke today. And liquidity is one thing which we are banking on right now, and even our finance minister understands this, and he's also trying to get as much of inflows as possible into the country. So I think if liquidity is one we need to watch on a daily basis. If liquidity is drying or it is getting slow, the kind of money coming into our country is getting slow, that can be really worrisome for us. So that is something which is very important and needs to be watched very closely.
Right. Nitin, just to scratch that point on earnings a little further, which according to you could be the weaker pockets this quarter in terms of earnings?
No, I think if you really see the infra pack, the auto, all the rate sensitives, they will probably be the worst sufferers. Also some of the mining companies will probably be some of the worst sufferers this quarter.
Nitin, talk about the auto pack, because what's your thought on the two-wheelers in the near term? It's pretty evident that some of the pressure points for the entire Indian two-wheelers are very visible. Competition's intensified, margins are coming under pressure. How would you view this basket?
Well, I think for the time being, we would advise investors, to kind of stay away from them, because clearly, I think till and until you start seeing the impact of more and more rate cuts, showing up as far as demand is concerned, I think, look, this economy has been growing based purely on consumer-led demand. At some stage, if there is no revival, even the consumer demand was going to start feeling the impact. You saw that having on housing, you're starting to see that in autos and so on and so forth. So I think, it's going to take at least a few months, or I think a few quarters before you start seeing a revival starting to take place gradually. And I think just as, you had almost 11 or 12 interest rate hikes before you started seeing you reached the tipping point and you started seeing that impact on autos. Similarly, I think you'll probably see a couple of more rate cuts before you start seeing, some sort of impact starting to finally percolate down as far as consumer demand is concerned.
Sandeep, how are you looking at the charts of the two power stocks which really shot up in trade today, at least most part of the trading day? Adani Power as well as Tata Power, some regulatory relief coming in over there. Do you think they will actually go ahead and gain the moment market actually pulls back?
Well, Ajay, yes, both I won't say both are looking good. Adani Power is in my buy list, but Tata Power actually gave away the gains that it made, and it closed at the lowest point of the day. Probably because of the market or because of the sell-off in the market. But I would pick Adani Power as a buy even at this level. It has been holding on, and I see some more upside.
Neeraj, wanted your opinion on some of the mid-cap pharma stocks, because it's pretty evident that on a day of inherent weakness, some of your names like Cadila, Strides and Aurobindo Pharma, all of them held up. Would you bet on some of the defenses at a time of such volatility?